This episode's made possible by Planful.
Hi, this is Allison Stallo, CFO of Fundrise, and you are listening to CFO Thought Leader Podcast.
This is episode 938.
The other thing that we as a company are getting better on, because it matters, is just understanding our customer mix as far as segment, correlating that to, at least at a higher level, given our stage of company today, what are the unit economics of those different segments, and do we like those or not? What's the retention rate look like by segment? What's the software versus services mix look like? Just all those kind of criteria, because that will help you based on what you are today, who you are today, your product functionality, help you guide you to what's the optimal place to focus your investments today.
Hi, it's Jack. On today's show, we speak with Jason Leet, CFO of Zylo. Of the different acquisitions Jason Leet became involved with during his days at ExactTarget, there's little question the seventh was the most impactful on his finance career. It would also be Jason's last acquisition, or rather, his last ExactTarget acquisition, given this time it was ExactTarget that was being acquired. Turn back the clock to 2013, and ExactTarget became the largest company Salesforce had ever acquired, as well as the first publicly traded company to be acquired by Salesforce. Over the next 9 years, Jason Leet would work on more than 40 acquisitions for Salesforce, including 4 more publicly traded companies. You'll hear that story and much more on today's episode. We'll begin after this.
Hi, I'm Rowan Tonkin, Chief Marketing Officer at Planful, and we're a proud sponsor of CFO Thought Leader. At Planful, we're empowering teams just like yours to drive peak financial performance in every corner of your business. What sets Planful apart? We have purpose-built applications for every department, from FP&A to accounting, marketing to HR, all with built-in financial intelligence. This means we can get you up and running within weeks, and it requires minimal IT involvement. So you can rapidly and seamlessly engage everyone across the business in your key financial processes. Best of all, you can't outgrow us. We take the pain of growing away with an unmatched ability to scale with you. You have an endless runway with Planful. See why over 1,300 customers around the world choose Planful as their flexible, user-friendly, end-to-end financial performance management platform. Go to planful.com and see how you can make financial performance a team sport in your business.
Hello, we're speaking with Jason Leet, CFO of Zylo. Jason, welcome.
Thanks, Jack, for having me. I'm looking forward to the conversation today.
So, Jason, as always, we're going to ask you to look back for us. That's how we kick off things. And we want you to go back in time and try to identify some of the experiences that you feel really prepared you for this role. What would come to mind?
Yeah, sure. Happy to. I would. Three certainly come to mind. I think the first one is, for a lot of people, it's those formative years coming out of college. And for me, I started out in the Midwest, and when I left college, I moved out to Silicon Valley. And this was in the late 90s. It was a very exciting time, just with the technology industry and the dot-com era. And it was very formative for me because it was a time where it was a changing of the guard. Technology companies existed before the year 2000. And, what I saw firsthand were some of the high flyers of the 90s really starting to face, less certain futures despite everything that was going on in the dot-com boom. And one of these companies was a company called Silicon Graphics that no longer exists today. But they were a darling in the 90s, had reached $4 billion in revenue. And they were a client of mine because I started out in public accounting. And it was really just fascinating to watch this company go through this phase of decline, restructure after restructure. And, ironically now in hindsight, the corporate campus of that once flourishing company eventually became the corporate campus of Google and took it over. So it was just kind of changing of guard from one, premier technology company to another during that time. But, obviously the biggest impact to me at that phase of my career was proliferation of the internet companies. They had incredible valuations and prospects, but really fundamentally in hindsight, many of them had very shaky business models that we know, they eventually had their day of reckoning in the 2000 era. So the takeaway for me and why I bring it up is just, it's easy to get caught up in euphoria of a great emerging industry, like whether it's the internet or AI or something else like that. That's very exciting to see progress being made. But no matter what great next emerging industry it is or great company, nothing's immune from economic challenges and shifting macro trends. All those things can be temporary. So that was kind of helping me level set that it's not all up and to the right, if you will.
Can I just ask you a question about that? Because I have to believe there was a time, and again, you were at Ernst & Young back then, and it's like 4 years, but 99 to 2003, it had to be so tempting to want to join one of these .coms. And you had the opportunity, no doubt, to do it again. They were getting all these options. It looked like a road path to success for sure, but you didn't. And then everything hits the fan, let's say, and I imagine you were like, well, okay, I think I'll stay at E&Y. Or no, was it a little different than that?
No, that was exactly it. I showed up and, very early in my career and saw this revolving door from EY and public accounting. Everyone was going to the next hot brand, the next hot .com, and getting incredible stock options and on paper, in theory, worth a lot of money. So I felt like the silly person at the time for not doing that, even though I only had a year experience. So I think, thankfully for me, my safeguard was I probably didn't have enough experience to find something meaningful at that time, and then obviously quickly saw that it was very transitory, very temporary as far as that, and just how quickly things can pivot. So being a finance person, sometimes we're risk averse. That certainly was a reminder to me of if things seem like they're too good to be true, maybe they are, and really, be careful not to get caught up in euphoria and really take a hard look at, what are the fundamentals, what are the business fundamentals, because ultimately that's what's going to matter in the long run, versus the excitement of whatever the industry du jour may be at the time.
Well, thank you for allowing me to interrupt there and having you share some additional insight for us. Thank you. Where are we off to next? What happens next?
Sure. So as I think about kind of the next phase of experience, and just a very impactful part of that for me was the opportunity I had, fortunately, to experience the rocket ship of ExactTarget at that time about 15 years ago. And what was interesting and informative on that was this opportunity to join this company that was very exciting, great culture, great people there. It was about a $30 million revenue company tracking towards profitability. And at that time, back in 07 timeframe, companies were going public at that size. Certainly not the case today so much, but that was a viable IPO in software. And so it was very exciting to be part of that. And we went through the process shortly after I joined of going public. We filed an S1, we cleared all the SEC comments, we were ready to go on the roadshow. And right before that, the listing, boom, the great financial crisis happened, and it basically slammed the door on an IPO to us. And that was devastating. It's a tremendous amount of work to go public. It's a huge amount of excitement in the company as far as that next chapter for us. But thankfully for the leadership team, we quickly used it as an opportunity. We leveraged it to raise a lot of capital privately via new venture capital partners, and we invested heavily in our business to really accelerate the business and take it to a whole new level at a time when most other companies were pivoting hard to pull back on spend. We saw that this is our opportunity to do something different and make us bigger and stronger. And that really paid off with accelerating our revenues. And we eventually had a very successful IPO in 2012 and eventually were acquired by Salesforce in a $2.5 billion acquisition in 2003. So for me, kind of that takeaway, that lesson was, as the saying goes, never waste a good crisis. That crisis for us was having that IPO door slammed on us, and it became a pivotal moment for us in our eventual success in hindsight. So just a great experience, and really emotionally firsthand experiencing the highs and lows of that seesaw of events over that period of time.
So
and then
I was going to say, it was, what was it, 5 or 6 years before they were able to IPO again and have success?
Yeah, it was, what is it, 5 years. Yeah, 2000, well, 4 or 5 years, 2008 to 2012. So yeah, it was a long road, but that gave us time to, invest that capital and really see, very meaningful acceleration of growth, which is hard to do. And it's also quite fortuitous for us because, as you know, many times when you become a public company, there's an expectation of earnings growth. And, as I mentioned earlier, we were tracking towards profitability. So this allowed us to hit the reset button, go, invest, hit the reset button on our earnings, and really kind of delay that path towards profitability until, we were ready to go public at a later date. So it just allowed us to have more flexibility as a private company for that period of time, and eventually translated into, success as a public company.
Meanwhile, that period for you came in the door at ExactTarget. Were you more accounting oriented? I mean, were you going to be, go down the FP&A path at ExactTarget? Is that where you really began to get more into the FP&A side of things?
Yeah, so I kind of skipped over a public company I worked at between EY and ExactTarget, and that it was a company called Affymetrix. They were focused on providing tools for genetic research, so more in the life science space in California. And that was the time when I really made that transition where, many people, especially if they're on the CFO track, make that transition from more accounting focus, had a great foundation in technical accounting, understood the kind of the nuts and bolts of how business works from the accounting perspective, but really wanted to be more in the business, more forward-looking, and leverage that information or those skills to help add value to the business, support the business, support our customers. And so that was the period of time I made that transition. So by coming to ExactTarget, had that breadth of experience at that stage of my career. And our finance organization was relatively small at the time, so it was a great opportunity to build out a finance org more holistically. So I was probably more on the FP&A side at that time, but really it was about building a team that didn't exist because we were growing 40-50% a year. So it was really just keeping up with the demand and adding the right resources across the CFO org at the right time. And so I had opportunities to build new teams, manage accounting teams, manage finance teams, but really the challenge for me as I think about that period of time was I was challenging myself to keep my professional development growth up at the same pace as the company. I didn't want to get left behind. So I was constantly challenging myself to rise to the occasion, learn new skills, take on new challenges so I could continue to have a leadership role in the ExactTarget organization and help them be successful.
Now, I have to imagine that the news that you were being acquired by Salesforce was something of a, hell yeah. It was good news. Maybe people were nervous, but overall, for someone like yourself, you're a VP of finance, I think, at that point in time. The opportunities, I mean, it's the, the pioneer of the cloud. It's all those things. It's the giant. What would you tell us? What was the sort of the expectation when that happened?
Yeah, so I personally, I couldn't be more excited for the reasons you said. I remember I was involved in diligence, so I was aware several months in advance of it being announced. And I remember, buying Mark Benioff's book, Behind the Cloud, reading that, trying to get in the mindset of the company. But just going through diligence and knowing just the premier position that Salesforce had in the software industry at that time, I was super excited to learn more about it, to be part of it. And through diligence, I was exposed to a lot of great talent. So I personally was super excited. That was not the case for everyone, as it happens in M&A, especially across G&A, across the CFO organization. Many people were very nervous. Many people assumed the worst. But actually, in hindsight, it turned out to be a great story because those people were retained. As it relates to finance, we've built out a very large, what is today a very large finance organization that's really at its core was the ExactTarget finance organization. So it was great to see those people continue on their career journeys and see Salesforce leverage that talent and really help us not only support what was ExactTarget, but they've gone on and supported all aspects of Salesforce. So very very proud to be part of that. That's a great opportunity for myself and all my colleagues at the time.
Yeah, I want to tip your hand again a little bit for you. Just that, let the listeners know you then spend your next 9 years at Salesforce, and you become a senior vice president of finance there. Just would love to understand better as your development continued there, as you become a more senior leader there. Anything you can share with us that you felt they did right?
Yeah, so obviously a much bigger company, much more sophisticated, a lot more specialization, and it was a great place to learn. And so, for myself and for my colleagues, it was an opportunity at first to continue to support the ExactTarget business, but after that, as you go through integration, really is a great opportunity for people to kind of pick different lanes of experience and grow with those teams. Further from there. So it was just an opportunity for people to really kind of stair step their experience that, you grow with a company, you're growing at a certain rate. This was a very large stair step. And again, because those people were retained, it was a great challenge for all of them, myself included, to rise to that occasion. And, for me in my story, and this is kind of the third thing I would call out in my experience was, it was an opportunity to further hone my skills in M&A. We had done 6 acquisitions with ExactTarget of varying geographies and company models. But this was an opportunity because it was at the time it was Salesforce's first public company acquisition and by far its largest. The ExactTarget folks and the Salesforce folks were all in this together to kind of figure out how to make it work. And so you can either find that frustrating, or you find that as an opportunity to really create a best-in-class M&A organization, M&A machine. And so that's what we set out to do. I spent the next couple of years integrating ExactTarget, help make them successful with my colleagues and the leadership team. And then, my own personal example of talking about that stair step of experience, I was able to move into a leadership role through promotion of leading a finance team that supported all future M&A for Salesforce. So over the next 9 years, was able to work on 4 more public company acquisitions, 40 acquisitions roughly in total. And it was just in doing that, I was supporting not only the deal cycle itself, the diligence, but also had the opportunity to support the integration, which for smaller companies can happen very quickly, and for the larger companies can take multiple years. And for me, in that leadership role, was an opportunity for me to be that CFO of that acquired business during that time. So just a tremendous amount of variety of people I was dealing with in different companies, different business models. And so even though it was 9 years, it was completely fresh because it was always changing and just wide variety of experience. So I learned a ton from those acquired teams, the leadership teams that I worked with. I learned how important it is to invest in these companies once you buy them to really help them accelerate the growth and get that top line synergy you're looking for, hopefully in doing an acquisition. And for me, I think what helped my team and I was just that sense of ownership, where I took personally the success of each one of these acquired companies as my own success or failure. And I think because of that, and because the team and I intentionally took a very much of a broader leadership role in the M&A integration kind of cycle, and because being in finance, you have a 360-degree view of Salesforce and then also the acquired company, it was an opportunity for us to really have much more of a leadership role in the program overall. So lots of resources at Salesforce focused on supporting M&A. I was very proud of the opportunity for us to play a very large role cross-functionally across the M&A, making those acquisitions successful. So for me, going back to your original question on my Salesforce experience, it's just about having that positive attitude, seeing it as an opportunity, and then going for it. And especially for those opportunities to give you exposure to a ton of breadth of people and different businesses. And the other piece I would touch on this, and this was kind of an aha or learning moment for me, is when you think about M&A and integration, and you think about like the systems and the processes and how do you align all those, being in it and being responsible for a component of it, what I found is, especially as a leader, the most time-consuming and the most difficult part of that really is the people part, because you're dealing with people, especially in finance and G&A, that are just had their professional lives materially changed and outside of their control. So the challenge was, how do you engage those people? How do you get them excited? How do you motivate them to make this thing successful? So not easy, not certainly did not have a perfect batting average, but it was something that really challenged me as a leader to how do you lead teams and people during difficult times, because those will happen regardless of the situation in business. And that really pushed me in my own personal growth.
Very interesting. The team that you described to us, the M&A group that specialized in different deals. I mean, were there multiple M&A groups, or was this no? This was the group that when there was a prospect, you folks would become involved in some way.
Yeah, so certainly over time, the M&A program built out in size, so it got larger and more resources. But finance, and this predates my movement into the leadership of this role. Finance was one of the first groups to create a dedicated team to support M&A, because they saw that it was going to happen over and over again. So by the time I left the role, all major functions of the business had M&A teams of varying sizes. But what I was kind of calling out earlier was, I think because we were early to the game on supporting it, and because we leveraged that wide purview and really leaned into that, we had a large role in it. But certainly takes a village, a company the size of Salesforce. And yes, we saw that across the organization.
What's really interesting is just your involvement in some of the deals or the due diligence. I'm trying to get an understanding of when they say, okay, we'd like the team to get involved in this. What's likely to be the next two chapters? First, the due diligence, then then Jason Leet shows up to brief. Can you reveal to us how these things often unfolded? Sure.
So we would, finance and myself, we would engage with the corporate development team for Salesforce early on. So like any acquisitive company, there's a pipeline of interesting prospects at all times, and you want to keep that warm, like a list of prospects. And so they would always kind of be out there kind of building that funnel. And then once there was potential interest and they wanted to have something with more kind of definition or clarity for Salesforce executive team, we would get pulled in, because at that point you start thinking about, well, what if these two companies come together? What could that look like from a financial output perspective, right? Here's the value proposition broadly, right? Here's the synergy broadly. But how does that translate into revenue growth, expenses, operating margin, et cetera? So we would partner and leverage FP&A skills and leverage our experience on prior deals to work very closely with the corporate development team before we ever sent a term sheet on anything of interest. And then you agree upon a term sheet. A large group of people would then go due diligence, my team and I included, and really kind of go through the all the standard checklist of things to make sure you understand what it is, what it isn't, across all functions, not just finance. But one of the key things that phase that we're doing is pressure testing and further refining and building out what we would call the deal model, right? These are the projections of, here's Salesforce standalone, here's the acquired company standalone. If we bring that together, what does 1 + 1 equal? And that was very important to do that as accurately as possible, even though there's lots of assumptions and unknowns, because obviously Salesforce is a public company. for a large enough acquisition, they would potentially update their guidance. And so it's something you want to get materially correct, and at least at a high level. And so we were constantly trying to understand, at least in the aggregate, what's the top line revenue impact, and then what's the investment or operating margin impact. And so again, you can't get every assumption in between those two bookends correct, but we did a lot of work to try to make sure those two bookends were in the right zip code for the company. So that was that phase, and then assuming diligence goes well, then working with corporate development, working with my peers and other functions, we would come up with basically an integration plan, and that's where we would start to lay out at a high level. Here's what integration looks like from our point of view. Here's kind of potential timelines. Here's the priorities, etc. And then we would share that with the acquired team before we would close to bring them along, get their feedback on it. And then once that deal closed, that plan would be set and it's hit the ground running as quickly as possible. Because again, you can't finish integration overnight, but you want to start capturing whatever the synergy was that you saw as quickly as possible. Accelerating Salesforce's top line growth, reducing expenses, whatever the case may be. You wanted to move as quickly as possible to capture that value as quickly as possible. And then from there, it's a lot of heavy lifting as far as executing, aligning systems, aligning processes, aligning teams to just drive that efficiency that needs to happen so you can capture that value.
When you close a deal, some of the senior leaders, it's generally understood that some of the senior leaders from the acquired companies are probably not going to be there. So there would be this potential leadership void at the top of the acquired company, one would think. And is that a role you would step in and play? You would become, and I think this is what you might have referred to earlier, you'd become sort of the CFO of that company being integrated. You'd fill that leadership void.
That's correct. Yeah, it would be a relatively short period of time that the CFO would stick around. And honestly, it's very much mutual in most cases where that CFO is looking for their next opportunity because they know G&A finance needs to be integrated and aligned, and that's not necessarily always the kind of experience that they want at that stage. So they would we would make sure we're in good order, but they would usually step to the side relatively quickly because G&A finance needs to move quickly as supporting the combined business, and this is where I would leverage my experience with Salesforce to then start bringing those teams along and aligning them on process, policy, organizational structure, etc.
And finally, and we want to learn about Zylo, but I really appreciate you giving that level of detail here. It's wonderful. How many deals, and again, not that you spearheaded or what have you, but over your career there, did you ever try to think about how many companies you were somewhat involved with their integration or the acquisition of?
Yeah, as far as deals that closed, it was north of 40. I don't have the exact number off the top of my head, but there's lots of just like any other M&A team, you look at lots of companies. So the number of companies we looked at and thought about and looked at from a financial perspective was certainly in excess of that. But yeah, just really enjoyed being part of a highly acquisitive company because most companies aren't very good at M&A because they don't do a lot of it, and so you're not able to build that muscle and have that experience of this works well, this doesn't work well, don't ever do that again. And so just you learn a lot through experience, trial and error, and if you're doing it enough volume and retaining the talent that's been doing it, then you can get very good at it. And I would argue Salesforce got very good at it because of that.
Jason, outstanding. Thank you so much for taking the time for that. We might have a few more career-related questions later for you, but right now let's find out about Zylo. What type of company is this, and what are its offerings about today?
Sure, yeah, happy to go into that. So I've been here for about 9 months now, and as CFO, and Zylo is near and dear to my heart because it was co-founded by someone I hired when I was at ExactTarget 10 years ago. And I hired that person 10 years ago to solve the problem that Zylo does today for our customers. So what is Zylo? Zylo is the leader in the enterprise for SaaS management and optimization. So what does that mean? We help organizations manage, measure, and maximize their software investments. We have two personas that we're targeting, and working through that problem I described. With first is the CIOs and the IT departments who are charged with managing a company's technology stack, including software. The second are finance professionals like myself, from CFOs to procurement leaders. What's interesting is software in many companies is the second largest operating expense behind employees. And so what we're trying to do ultimately at a high level, simplistically, is helping them make the most dollars they're spending in this category, because it is quite large and in the past many times overlooked. And we've done a lot of research based on our large customer base and large amount of spend data we have and benchmarking data we have. And in our research, we see that companies typically only use 56% of the software licenses that they're buying. So there's a lot of opportunity here. They're spending a lot of money for things they're not getting any value of. And the other thing that's happened, especially over the past 10 years, is there's just been a proliferation of software in general across companies. It's sprawling, it's lots of duplication. And why is that? It's software as a service. It's very easy to buy. It's a contract. It's a subscription. And today it's easy for many companies. It's easy to buy as pulling out your corporate credit card and submitting an expense report. So it's really decentralized the ability for people to buy software across the company versus the previous traditional on-prem. And so IT departments and finance organizations didn't lose their leverage on trying to be efficient, trying to prevent duplication. And they're losing leverage in their ability to consolidate these vendor agreements with software vendors. And they're lacking the ability or the opportunity to have the ability to negotiate price, for example. So we have a great, I mentioned enterprise kind of focus. We certainly serve all sizes of companies and industries, but we have a great list of enterprise customers like Adobe, Atlassian, Coupa, DoorDash, Intuit, Salesforce, et cetera, et cetera. And, I'm super excited about the company and the platform, because from my purview as a CFO, I can understand the value proposition. I can see the quantifiable value, the hard ROI that this software platform can deliver. And that's not always the case with a lot of initiatives, a lot of other software tools that you may have. So, similar to what I was saying earlier, software at Zylo is our second largest expense line item. And I partner with our CTO, our IT organization, to drink our own champagne and really kind of rein in the software sprawl that occurs at even our size of company. So what differentiates us? I mentioned the enterprise focus, but also I know we have the best software discovery model in the industry. And so why does that matter? What we found is most companies actually don't know what they have, right? The problem is somewhat invisible. They maybe have a view into what the CIO owns or some of the big spend. They don't really have a complete view. And so for us, we believe that's very important to start with an inventory of what's there in the first place before you can then go take action on it and drive value in it. And our discovery engine that we use is powered by an AI matching model. And so we look at it from the financial spend data perspective. We take all the customers' AP data, all their expense T&E data, and uncover all those software transactions that are coming into the business from all different avenues and categorizing them. Is this a collaboration tool? Is this a video tool? And then just helping organize that as a starting point. Because 51% of software transactions aren't coded, categorized correctly. And so you have this stuff just kind of swimming throughout your financial data that you don't really have a full view into. And so, because of our enterprise focus, because of our customer base, we have 30 billion of software spend data under management. And that provides us the opportunity to provide rich benchmarking insights into software pricing and spend versus others in the industry. And we use that to help inform our platform, inform our customers on finding ways to save money, whether that's through price negotiation, whether that's duplication of similar software tools, et cetera. And also, the value there is it helps people organize and get a calendar around software contract renewals. So, lots of software and companies, they're all subscription based. So at some point, you've got to renew that contract. And for large enterprises, it could be over 600 software contracts a year that are coming up for renewal. So even in companies that have procurement departments, it's hard to stay out in front of that, have the data available to negotiate with effectively, understand the contract terms in one place, the usage data in one place. So we really help them organize it, provide visibility to it, provide insights into it so that then they can take actions to right size either the volume or the pricing or what have you, duplication of their software stack in their company. So long-winded way of saying what Zylo does, but again, from a finance and CFO perspective, something that's certainly in our wheelhouse, something that makes me very excited.
Yeah, nice overview for us. Thank you for that. We always like to ask, I see you arrived in November of last year, and shortly thereafter, there was a raise of capital before the end of the year. So can you give us maybe an abbreviated history of the capital structure and where you folks are today?
Yeah, so that was our Series C that we raised in November, a little over 30 million. We've raised less than 100 million through the prior funding rounds, but we have a great list of investors that we're very proud of. Our Series A was Bessemer, Series B was Menlo Partners, and Series C was Baird Capital and Spring Lake Ventures. So great board members and great assets that we have, and just really appreciate their support of our business and the vision that we're looking for here.
Jason, we like to ask our guests about their lines of sight into the organization and whether upon their arrival they had all of the visibility they wanted. And we're also interested in whether there was a particular metric or business dynamic that perhaps you thought wasn't getting all the attention it deserved, or maybe there was one that you brought more attention to or exposed better. What would you tell us about your lines of sight?
Yeah, no, I love the question because in software and SaaS companies, there's all kinds of metrics to track, and they all have great reasons why they exist and measurement reasons for your business. One of the things, going back to my Salesforce experience, I learned though just through observation was just seeing the power of aligning a very large company around just a few key metrics. So there was a lot of reporting, tremendous amount of operational teams, but when it all came down to it, there was only a few metrics that were discussed and major decisions were made off of. And so I really saw the power of don't dilute the focus by measuring and obsessing about every single metric. That works in some companies. I'm speaking with my experience here in software. Software is very much focused on growth. It's focused on retaining your customers, and it's focused on being able to invest in that growth in a responsible way. And so for us, before I got here, and what I continue to reinforce is, how much are we booking? How much are we growing? How much are we retaining? And then what's that growth to cash flow or burn rate mix look like? Making sure those stay in track. And that sounds very simplistic, but it's easy for lots of different reasons to kind of get off track where you're over investing, you're under investing, and you're going to miss your opportunity one way or the other. I also learned that through ExactTarget as well. Our board and VCs were very good about helping us think that way of what's the right level of investment for the return that you're getting. So those are key metrics. I just want to continue to reinforce. The other thing that we as a company are getting better on because it matters is just understanding our customer mix as far as segment, size. I mentioned we're kind of enterprise focused, but we certainly serve all segments, and then correlating that to at least at a higher level, given our stage of company today, what are the unit economics of those different segments, and do we like those or not? What's the retention rate look like by segment? What's the software versus services mix look like? Just all those kind of criteria, because that will help you based on what you are today, who you are today, your product functionality, help you guide you to what's the optimal place to focus your investments today, but also gives you a roadmap on, okay, if we want to go into these other segments, we need to be aware of this. Maybe we need to include certain things into our platform. Maybe we just need to understand the different cost profiles of doing that. So as a leadership team, as a company, that's an area that through our evolution we've started to get smarter on, because it's easy just to focus on growth in aggregate, but when you think about the different levers to pull and the different implications of that, especially on the cost structure side, it's important to think about customer mix, customer segment.
Well, I think it was shortly after your arrival there became a lot of headlines around ChatGPT. Wondering, as you arrived and the discussion of AI got in high gear with so many companies and finance leaders, curious about the last 10 months and whether AI is part of your conversations today as far as the finance function is concerned, as well as more broadly.
Yeah, I mean, it's kind of hard to escape that topic these days. You have to be talking about it and have a position. So certainly something we spend a lot of time thinking about, talking about in our company. And I think the ChatGPT, the generative AI piece, is kind of the leading edge of that topic today. And I think some people or some companies have are on a path that can be very compelling, and I think a lot of other companies are talking about it but may not have the right strategy yet, right? It's given how impactful it is and how such a new and differentiated ability versus what we've had in the past. So I think you put generative AI in one category. When I think about kind of traditional AI, I mentioned it earlier in our platform. I believe in Zylo on Zylo. We need to be the best use case of leveraging Zylo, and so we leverage it to drive efficiency on reducing any kind of manual or dull type of work on capturing all the information I was mentioning earlier about software, but then also leveraging it for analysis of data, right? Even mid-sized companies, you can have a lot of data points. How do you organize it? How do you surface those insights, those trends? And so that's where we're trying to leverage a platform like Zylo, leverage AI that's within it to really help you see things you wouldn't see otherwise, do more efficient, more productive work than you would do otherwise. And I think why generative AI is so exciting is that's really kind of the next chapter of where we go from here. And it's something that gets us very excited as we think about the future of what Zylo and our platform would look like.
Excellent. Thank you for that. We're going to jump to our finance strategic moment question. And again, this is where we just ask you for one. You've had 3 of these today, probably a moment of strategic insight due to your lines of sight into the organization, related to period of discovery for you, whatever it might be. What comes to mind when we ask for a finance strategic moment?
Yeah, so I think about the time I was asked by this was during my Salesforce experience, and I was moving new into that SVP leadership role. And I was sitting down with the CFO at the time, Mark Hawkins. He was talking about the things that he wanted me to be responsible for, and I had the assumption at the time I was like, well, I'll just take my predecessor's responsibility to move forward. And he's like, no, I want to add some additional things to it. And so I was like, okay, great. What are those things? And so one of the things he asked me to do was for finance, but really for finance and be an example for all of Salesforce, was to figure out a plan and execute a plan for instilling a culture of continuous improvement mindset at Salesforce within our, like I said, first our global finance org. And I found that a little daunting when he told me that topic of responsibility. For a couple things. One, the company culture at the time was very hero-based, very immediate results-centric. So I knew something like a continuous improvement program, very important, great examples across industries of material impact that's made. I knew that was going to be a tall order in the reality of Salesforce in the current state. The other challenge was, I personally had no meaningful prior experience with continuous improvement initiatives. I knew of it. I knew, of Six Sigma and, the stories of great companies in the past leveraging things like that. But I'd never worked in that. I, had worked in the technology industry, software industry, and that's, not something you get to until much later in your life cycle. So I, did not have any exposure to it. So I said, okay, I'll take on the challenge. So I like the challenge, and went about trying to figure out a plan of what I was going to do because I didn't know where to start. The first thing I did was, though, the great thing about Salesforce is it's a great network of other companies and other executives. And I said, okay, I'm going to leverage that network and I'm going to learn from the best. And so I was able to connect with my counterparts, my finance counterparts at Dell. And they just have a tremendous track record of continuous improvement, driving efficiency and scale in their business over their great history. So I was able to go and understand, okay, what does this look like, right? What is, not end state, but what does, best in class look like? And how do I think about bridging that between where we were as a business at the time? And from there, the next thing, once I learned those basic things, the thing I had to do, I knew I had to do, was to make it Salesforce friendly, because we didn't have anything like it in the company. Anything that was branded that said something like Six Sigma would just not be accepted by employees. We just thought of the company and kind of how we operated very different than other non-technology, non-software companies. So I then went about translating it and making it digestible for our employees in the vernacular of Salesforce. And then the last thing I did was just knowing kind of the current environment that I was describing before. I said, okay, we've got to make this a bottoms up rather than a top down initiative. Anything top down, it's going to not be a priority, or it's just going to be rejected for all the reasons. And so by doing bottoms up, and really that means training and enabling the rank and file across the finance organization initially. I knew that once they had the tools to do it, they knew where the issues were, and they knew generally how to fix it. They just didn't have great processes or tools to go about doing, especially cross-functional things. And so we had to give them the right tools and the empowerment to do it. So I enjoyed it, despite the initial concern and challenge, because personally, my leadership style is very much servant leadership. I believe my purpose as an executive is to make our customers, our employees, ultimately the company successful. And so this was an opportunity to invest my time, my leadership in partnership with others to really go serve all of them. And we drove great results initially within finance, but then across the company. And it was really something that, from a learning and enablement perspective, we rolled out across the company. And we showcased it at Dreamforce as far as the art of the possible and some real life use cases. And it's something that had a lasting effect to it. Something that employees can carry on from there. So very different outside of your probably traditional finance, your traditional CFO type of responsibilities. But I give all the credit to Mark Hawkins at the time for saying this is missing in the company. He had previously worked at Dell. He had worked at Agilent, HP. So he knew what that looked like, and he wanted to use finance to showcase it. And I had the opportunity to help drive that along with others.
Episode 922. This is 1 Minute with Dev Ahuja, CFO of Novellus.
I think that there is some credit that goes to the finance organization in the way we have been able to enhance the profitability and results of the company. I mean, doubling EBITDA is not an accident. It has been a strong partnering between the business leaders and the finance leaders coming together to prioritize, allocate resources. Capital allocation is a big deal for us. We are a very capital-intensive company, and if you don't make the right investment decisions, things can go very badly wrong. So if you invest wrongly, it can derail you completely, because these are big investments, and if they don't turn out to be right, it has consequences. But not investing has consequences because you don't grow. So finding that right balance of where do I prioritize and put my capital, I think that I have played a role in that. Both organically, we have done a big acquisition, inorganically as well. So, that has been something that, I have influenced, and my team has influenced together with all the business leaders in the team.
We want you to think back, and it wasn't too long ago, actually, Jason, that you stepped into the CFO role there. But that first 30 or 60 days, as many companies as you had looked into during the M&A work that you did, there still must have been something you wish someone had told you as you stepped into the CFO role off the mothership once and for all, both feet on the the Zylo train. What what is it that you wish someone had told you? If you could go back in time and give yourself this advice, what would it be?
Yeah, I think it would be an experience I've had in the past 9 months that I've been here at Zylo that I learned firsthand, and that no matter what, no matter the best laid plans, crisis will come knocking on your door, no matter what, and it's how you respond to it and respond to that challenge is really the growth opportunity for you and for the company. And so my recent example was Zylo was and is a customer of Silicon Valley Bank. And so the first rule of thumb of a CFO is don't run out of cash. And rewinding to the March timeframe, I find myself on a Friday with no access to cash, and payroll was due on Tuesday. So that's why I believe in, like, no matter how good things are for your company, for your industry, for whatever, you got to be looking around the corners to see what may be coming, right? Don't get lulled into thinking like the good times will continue. You got to challenge yourself to say what are those things that could go wrong, and try to come up with plans to mitigate that. So there's a saying that that I love. One of my prior CFOs used to say it a lot, and it kind of relates to this. Like, the best time to plant a tree was 20 years ago. Second best time is now. And so it's irrelevant that something didn't happen in the past that now you wish it did. You got to take action now and fix it as quickly as possible to impact the future. So it was, I can laugh about it now, having my first mini crisis as a CFO. But it's just, things will happen no matter what. So you have to be prepared for it.
I'm hoping my listeners will forgive us for me not following up on that. Everything was clear, and within 7 days you figured it out, or
we did. It was a long 4 or 5 days, but yes, everything worked out very well.
We like to ask our guests to reflect a little bit on our personal side with us, Jason. And I've begun to ask this question a little differently, just to put you on the spot. We want to know something personal about you. Is there something most people generally don't know about you?
Sure. Yeah. Happy to share. So now everyone will know this about me. Since you're putting me on the spot. No. So I was very fortunate a couple of years ago. I was able to take a sabbatical from work, and I really wanted to take advantage of that by doing things that I'd never done before. Really stretch myself in not just professional, but really kind of personal ways as well. And so one of the things that I had been exposed to, again, kind of going back to my Salesforce experience, was kind of this topics of meditation and mindfulness. Mark Benioff and the team have done a great job of kind of bringing that to Dreamforce, exposing it to customers and prospects, exposing it within the company, of just something that people may not have any firsthand experience to, and something that they might benefit from, in very much an optional way. And so I always enjoyed that. I always felt like it was just like a little taste of it, and not something that I knew enough about to really leverage it in a meaningful way. So going into the sabbatical, I said, okay, well, I'm going to do something that's going to make me uncomfortable, and I'm going to jump into the deep end of the pool and go live for a week at a Buddhist monastery and practice meditation and mindfulness and really figure what this whole thing's about. And I wanted to do it because if I could adopt it and leverage it, it was an opportunity to manage my stress better as an executive. That I knew it wasn't. You got to think about the long run, right? The marathon of this. And so I saw this as an opportunity to potentially do that. And so I did it. I had a wonderful experience. The first 24 hours I was questioning, what am I doing there? But it's something I'm very proud that I've been able to incorporate into my daily life, as far as meditation and mindfulness, and really helping that to kind of recenter and clear my head and kind of be present and not get spun up in whatever the stress du jour maybe.
Excellent. Thank you for that. I have to say, I always point this out lately anyway, that because we have many finance leaders telling us that they meditate now, but it was pre-pandemic. I think there might have been one or two, and since COVID has passed over us, it's fairly common now. That it's interesting. So I'll just point that out to our listeners. I wonder if there's a book or something that influenced your thinking. Any selection for us? Doesn't have to be a business book. Might be something you enjoy or escape with.
Yeah, so lots of great books. It's hard to pick one, but one I've always enjoyed over time, kind of because I feel like I'm living it or I have lived it professionally, is Crossing the Chasm by Jeffrey Moore. And I've had the opportunity to hear from him, speak with him in person several times over the years, and I just love how he kind of creates these frameworks and like organizes and simplifies what appears to be very complex business scenarios. And Crossing the Chasm, super simplistically is describing, Jeffrey Moore describes this vast chasm between early adopters of something, in this case I think about technology, and the majority of everyone else. And like this large chasm exists, and so your challenge as an innovator, as a marketer, is to narrow that chasm as quickly as possible to accelerate adoption so you can grow your business. And it really, in my mind, it represents the race for survival that all of us as technology companies are up against, right? There's lots of competition, lots of smart people and other companies with great products. And so how do you focus on leveraging your early adopters, but getting it out for mass adoption as quickly as possible? And there's no necessarily one right path. But again, I just love how he frames that. And it's just, firsthand that, all the companies I've been at different stages, it's applicable. So it's something I've liked because I feel like, just kind of lived it out multiple times.
Okay, and we are up to our final question. Thank you for that. We are going to ask you to look forward finally for the next 12 months. We're wondering what your priorities are as CFO of Zylo.
Yeah, for us, this past year it has been difficult to forecast our top line because of just the macroeconomic uncertainty. We call it economic headwinds here, and so for us, each quarter has been a bit different as far as the behavior we've seen with our prospects and our clients. So again, going back to the basic metrics of the company, like how are we going to forecast ARR? And I don't think Zylo's been alone in that by any means. And it's also very important for companies like Zylo that's investing for growth, right? We're putting up that capital in advance, wanting to see that return. And so making sure, going back to what I was saying earlier, making sure that growth rate in that investment stays aligned, correlated, is very important. And when it's harder to forecast the top line, it becomes a little bit more difficult to make those investment decisions. So has been and continues to be very much top of mind for myself and the company.
Jason Leet, thank you for joining us on CFO Thought Leader.
Thank you very much. Enjoyed the conversation. Thank you, Jack.
Hello, Thought Leader listeners. As you have perhaps already heard or even seen, we're now featuring the career lessons and moments of strategic insight shared by our CFO guests as Thought Leader videos. You can now find these videos on our blog at cfothoughtleader.com and, of course, our newsletters, but also on LinkedIn. If you haven't already, please go ahead and follow our CFO Thought Leader LinkedIn company page, and you'll be certain not to miss a single Thought Leader video debut. CFO Thought Leader, the #1 thought leadership platform exclusively for and by CFOs. As always, thank you for listening.